What's going on, everybody? Welcome back to the Rideshare Hub. My name is Dylan. Thank you so much for coming by. Uber and Lyft rates are coming down, and we're going to be talking about this. So please thumbs up the video. We're going to get into all of the news. We're talking about Uber bonuses, Lyft rates right now. And we're basically doing a deep dive on what the heck is going on in the market right now. Is it worth it to be driving? And yeah, thank you so much. By the way, thank you for 100,000 subscribers. We appreciate you all. And without further ado, I say we jump right into the video. Don't you guys think? Let me double check and make sure we are live. We're doing a live stream right now, so if you're watching this, we're live. If you're watching this on the replay, make sure you're subscribed and you have notifications on. So thumbs up the video if you're watching this. We have just about 50 people right now, so let's do some shout outs. Epic, what's up? Fox Tech, what's up? Epic. Are you serious right now? Yeah, we're gonna get into the news. By the way, we have a sponsor on the channel, Buckle. This video is brought to you by Buckle. I want to give a quick shout out to them. They're a car insurance company. They are super awesome, and they basically are a car insurance company specifically for rideshare drivers. So if you're an Uber driver or a Lyft driver, you can actually now cancel your old insurance and sign up for Buckle, which, by the way, you can just sign up and get a totally free quote and they'll send you $20. I know, as long as you're an active rideshare driver or food delivery driver, and you're in one of the areas where they're active, and they're expanding, by the way. So you can sign up. I'll have a link below, and you know what? Let me just go ahead and pin the comment. Should we do that, guys? Should I pin the comment? I'm not good at live streams, but what's up, guys? If you can hear me, see me, thumbs up the video. Or leave a thumbs up emoji. Luis Castaneda, what's up, mi amigo? ¿Qué onda? ¿Cómo está? ¿Cómo está? Daniel Salas is in Salinas. What's up, Bel Kasem? I'm trying to give a quick shout out to everybody. What up? What up, everybody? Oh, yeah. Let me leave the link below for Buckle Ups, just so we can all sign up for that if you want. And again, you can just get a free quote and they'll literally send you $20. So I would say, suggest to just check it out. Maybe, and it's important because when you're in an accident, you want to make sure you got proper coverage, right? Okay, we're going to do that. Can I pin this? Yeah, I can pin that. Okay, there we go. Sign up for Buckle Car Insurance and get $20 for getting a free quote. Yeah, you can check out their website here. It works for Uber drivers, Instacart, Lyft, GoPuff, Grubhub. And guys, they might even have you, getting a better rate or better quote or better coverage than your previous insurance company. And I don't know any other insurance company that really covers rideshare drivers and food delivery drivers. Peace of mind. No credit checks, by the way. Bum, bum, bum. That's pretty awesome. Immediate proof of insurance, best customer service. So yeah, they're featured on all these things, and they're super legit. I could go into why they're super legit, but like they have a phone number here, you can get your free quote. They have a lot of a decent amount of funding. But yeah, guys, let's get into the video. Uber and Lyft riders could soon start to see prices come down. So Uber and Lyft, basically what's been going on is they've been signing up a ton of people, to drive for Uber. And, the Uber CEO was basically saying that inflation is good for Uber. There's like,
Brian, thank you very much. And Dara.
They're basically saying that, inflation is actually a good thing for Uber because so many people need money. So they're actually seeing a lot of drivers signing up.
Market shift. You wanted to put a greater emphasis on profitability. What steps did you take back then that have put you in the position you are today? You were just on stage saying you haven't really felt these recessionary impacts so far.
Well, I think it's important to know that even before I sent the memo, we had a real focus in terms of efficiency, cost, getting to profitability, getting to free cash flow profitability. And so the company was already tuned in the right way. We were much stricter about headcount growth. We were looking at marketing efficiency, where to pull back marketing efficiency, where to lean in it as well. And the business was really executing well. But what I saw was that even though we were executing well, the market was changing, and it was changing so fast, and good was no longer good.
You guys like this guy? Do you guys like this guy? Are you guys a fan of this dude? Carsha, so sorry. I don't know. What do you guys think about this guy?
No. You had to do great in terms of both top line growth and bottom line growth. And for us, Uber, it's an incredible rally culture. I needed the company united, focused on driving profitability as well. We did just that. And what you're seeing now is in the last half to
ever getting to the level they were years ago.
The retail going out, spending on services, going out in the real world. And that's been a real tailwind for us. We're at a big conference. I think inflation, it's everywhere. So
here we go, guys.
The price of the car, price of gas, thank God, is getting a little bit better. Your groceries, etc. We're just
price of gas is getting better. What the heck? Did he just say that? It's over $6 a gallon here. When is that like a good price for gas?
The part of that basket in terms of spend. So we're not seeing spend move up or down. We're not seeing any signs of weaknesses one way or the other. If anything, 72% of drivers in the US are saying that one of the considerations of their signing up to drive on Uber was actually inflation. Life is getting more expensive. They need to.
72% Uber, 28% Lyft. Wow. So Uber owns most of it.
Pay extra for their groceries. So on the supply side, we may be actually benefiting from the inflationary environment.
There you see it, guys. So I wanted to play this video first because Uber CEO is basically saying, oh, inflation, everyone's struggling. He's like, well, we're actually benefiting because people are signing up for our app because they need money. People can't afford their groceries, so they're signing up for Uber. And so Uber basically, they basically, because there's so many drivers signing up, they're getting rid of bonuses. Like, they don't need to do these crazy bonuses anymore because they already have so many drivers.
I want to dig into the financials a little bit because, as you said, you've always...
Boring. I don't care about financials. Okay. So Uber and Lyft riders could soon start to see prices come down, analyst says. So listen to this. High Uber and Lyft prices may start to retreat as more drivers are hired. For all of us who may have taken an Uber Lyft over the past month or two or 6 months, prices have obviously seemed very elevated. I think that, and by the way, we've seen so many people share in and say, oh, Uber's taking, 50% of the profits, 70% of the profits on a single ride. They say, oh, a rider paid $40 and I only got 12. So I don't know exactly if, this is going to benefit driver or if that had benefited drivers at all, the fact that they raised prices so much, or if they just kept all the profits. I'm assuming that Uber and Lyft just kept all the profits and raised, bonuses for all their executives. The Uber CEO, he probably was like, yeah, let me just make a couple extra million a year because we can raise the prices. Whereas drivers, they're still struggling to make ends meet. At the end of the day, I don't think Uber really cares about, giving drivers more pay. I really don't. The fact that, to get from an airport to your house a couple years ago would cost $20 and now it costs $60. I don't see drivers making 3 times as much. Do you? Isn't that a little strange? For all of us who may have taken an Uber, blah, blah, blah. I think that was a combination of demand coming back on the margin more strongly, and then obviously the company is still playing catch up on a driver supply basis. Erickson added, as driver supply ticks up, we do expect it to get better for the industry overall, and you will actually start to see prices come down. So the way I believe that translates is that drivers will be getting less bonuses, less streaks. First of all, the sign-up bonuses, that I think that's going to be the first one to drop. So this really affects mainly people who are, about to sign up, who are thinking about signing up. Your new driver bonus will most likely be a guarantee of an amount that is something that you're already going to make anyway. So it looks enticing, but then you're out on the ride doing 100 rides and it's $1,000 bonus. Well, you might even pull in more than $1,000 in, or $1,000 guarantee. You might pull in more than $1,000 in 100 rides. So, Uber's like, well, we don't have to give you anything because you already made that. We're guaranteed you made $1,000. You already made $1,000. So, yeah, I mean, guys, it's crazy. Like I was just in LA last weekend, I guess. Wow, it's already Friday. But yeah, I was in LA on last Friday. And I didn't fill up, but because I filled up before, I'm a little outside of LA, so I'm a little bit cheaper, which is crazy because I still pay like $6.50 a gallon. But in LA, it's like over $7 a gallon. 7.29, I think, or like $7 is the cheap one. And then if you need premium, you're paying $7.50 a gallon, $7.60. So for the Uber CEO to say that, gas prices are coming down, it's a slap in the face to drivers.
I put you in the position you are today. You were just on stage saying that you haven't really felt these recessionary impacts so far.
Uber CEO, yeah, he hasn't felt any recessionary impacts because, this dude's pulling in millions of dollars a year into his own pocket. So why would he, feel like any recessionary impact?
Well, I think it's important to know that even before I sent the memo, we had a real focus in terms of efficiency, cost, getting to profitability, getting to free cash flow profitability. And so the company was already tuned in the right way.
By the way, if you guys are watching this video, please make sure to thumbs up the video. It does help out tremendously.
We were much stricter about headcount growth. We were looking at marketing efficiency, where to pull back marketing efficiency, where to lean in it as well. And the business was really executing well. But what I saw was that even though we were executing well, the market was changing, and it was changing so fast, and good was no longer good enough. You had to do great in terms of both top line growth and bottom line growth. And for us, Uber, it's an incredible rally culture. I needed the company united, focused on driving profitability as well.
Yeah, I'm sure you guys are. and you're using drivers in order to do that, which, by the way, there was a Biden proposal saying, Biden proposes new labor rule granting millions of Uber, Lyft, DoorDash gig workers employee status. Have you guys heard about Uber coming out and talking about this? They're trying to keep this hush-hush, my friends, because they don't want to pay drivers more money. The Biden-Harris administration has proposed a rule challenging existing worker classifications that could change the nature of the gig economy in the U.S. by redefining guidelines to fit current labor standards. What does that mean? Basically, labor standards are, people, the average American citizen getting some form of guaranteed or minimum wage. Number 2, getting paid time off, sick leave. Number 3, overtime pay, benefits, medical benefits, health benefits. And so many people who are out working for Uber and Lyft, they don't have proper health insurance. They're not getting overtime pay. And Uber and Lyft, they're putting out these incentives, these ride structures where you need to complete a certain amount of rides in order to hit this certain dollar amount in order to make a livable wage. But the only way to hit that ride amount is by working 60, 70, 80 hours a week. A lot of drivers are doing that, but they ain't getting overtime. They ain't getting time and a half. I know when I worked at Nike, for instance, I've had a lot of jobs where I, worked at Nike, worked at Starbucks, worked in bookstores, I worked in clothing stores, worked in warehouses, blah, blah, blah. Every single job I've had has always paid me time and a half when I work overtime. And also on holidays, you get paid time and a half as well. You work on even random days like, I don't know, like Martin Luther King Day or like, maybe I'm butchering this, but just, you know what I mean? Like the random federal holidays, like Easter or, I mean, I don't even remember. I think I might have even worked at Starbucks on like Christmas Day, because I don't know. I don't even remember if we were open. But like on certain random holidays, you get time and a half. With Uber and Lyft and DoorDash and all these other gig companies, Instacart, etc., you got people working around the clock. And there was just a study shown that, gosh, I should pull this up, but it was basically saying that like 60 million gig workers, or 60 million Americans have used a gig to make extra money. Yeah, this is even years old. This is even 4 years old, but like there is a modest, or a current statistic that I can't find out, that I can't see, but I'm sure it's higher. 57 million US workers are part of the gig economy. There's only around 160 million people, workers in the country. So over 36% of US workers are part of the gig economy. So that's why Biden and Harris are coming in and saying, like, look, you have this crazy amount of Americans, over 1/3 of Americans are doing gig for their income, or they're, dependent on this for their income, and they're not getting overtime pay. They're not getting paid time off. People ain't taking vacations anymore. People are working, and inflation is so high. The cost of living is so high. The cost of food is so high. Just like basic ordinary expenses are so high. So people are essentially being forced to sign up for these gigs, and the gig companies are taking advantage of the fact. We literally just saw Uber CEO interview saying that, we're benefiting from drivers. We're benefiting from inflation, because people can't afford to live anymore, so they're signing up for our app, and in exchange, we can essentially drop rates now. So we're not like really hurting for drivers anymore.
In terms of spend. So we're not seeing spend move up or down. We're not seeing any signs of weaknesses one way or the other. If anything,
here we go.
72% of drivers in the US are saying that one of the considerations of their signing up to drive on Uber was actually inflation. Life is getting more expensive. They need to pay extra for their groceries. So on the supply side, we may be actually benefiting from the inflationary environment.
Sorry, I talked over a bit. Let me repeat that, play that back, because I talked over him.
So on the supply side, we may be actually benefiting from the inflationary environment.
So the Uber CEO has the audacity to come on CNBC and say that we're benefiting from people struggling to pay their bills and people struggling to pay their rent. And I could see from one side, they're doing a service to allow people to make money to pay their bills, but at the same time, they're not providing any benefits. They're not providing any overtime pay, any sick leave, any practical payments for, gosh, I feel like there's definitely two sides of this, because at one hand, driving for Uber and Lyft, whatever, you say, oh yeah, just sign up flexible and, sign up on and off. You're a 1099 worker, you're a contract worker. But then at the same time, we need to actually address the reality that you have, like we said here, 57 million US gig workers as of 4 years ago. I need to pull up I'm assuming it's much higher now. I think what recent statistic I read was 64 million or something. Gig economy in the US. Maybe we can pull this up. Any statistics here? Yeah, we got 57.3 million. These are freelancers. Yeah, essentially gig workers. It's somewhat similar to what we saw 4 years ago, but I'm assuming it's 59 million according to this one. So we have around, over 1/3, nearing half of the United States workforce doing gig work. And that's the reality. And so that's why Joe Biden and Kamala Harris are proposing this labor deal, this labor rule, essentially, which would force all of the companies in the United States to, they're not. This is just a conversation, and nothing is defined yet. They have 45 days to basically comment on this now, and then they're gonna probably start discussing this in Congress. It's probably most likely firstly going to be discussed in the House of Representatives, which, what is there, like 400, House of Representatives. Just for anybody who's not, familiar with how the House of Representatives work, essentially there's around, 451 people or something? House of Representatives in 535 members of Congress. Yeah, 435 House of Representatives in 435 representatives in the House of Representatives. And that's one side of Congress. And then so they're most likely going to discuss this. And then once they come to some agreement, it's going to go on to the Senate. And there's 100 senators, right? 2 from every state. And then they're going to discuss this. And keep in mind, it's a Democrat-run Congress right now, Democrat-led Congress. And so, would be interested to see what takes, how that conversation looks. And I am happy that they're at least discussing this, because this is becoming a huge issue in the United States right now. Economically, like, we're in a really, really weird economic time in America right now, because inflation is rising so fast. It's getting so difficult even for people to afford to live. More and more people, like adults, are having to have roommates, live with their parents. They can't even afford rent. Rent prices are crazy. Housing prices are coming, to buy a house is coming down a little bit, but it already skyrocketed. So it went straight up, and now it's kind of like going down slightly, but it's already super high. To buy a house now, in California, $1 million house is, obviously it depends if you're in, I don't know, very inland, like it definitely like depends. But to buy $1 million house, like in Los Angeles, like they rarely exist. You're getting maybe a 1-bedroom condo for $1 million. And, in order to put a down payment on that, you at least at the very minimum need 5%. And that's 50 grand of cash and 6 months of 6 months of expenses. I forget what they call it, but basically, 6 months of your mortgage payment and all your costs, taxes, property taxes and all that stuff, in order to even qualify. So you need around at least 100 grand just to qualify for the minimum amount, 3.5 or 5%. And even and when the market's competitive, you need to be putting down 20%. They see a 5% loan and they're like, can this guy even afford the house? So I'm rambling, but we're just in this very interesting time right now. Yeah. Tanks. Thank you. Yeah. 435. I'm sorry. I totally forgot. I thought it was like 460. Comment down below. How much money does it cost you to fill up your gas tank right now? It's costing me over $100 to fill up my tank here in California. Maybe even more. Maybe closer to $150. Granted, I do have a large gas tank, but still. Okay. So let's see. I wanted to jump into our Facebook group, the Uber Lyft drivers Facebook group. And just play some activity of what's going on, and how, these people are being affected. Yeah, this is a gas price here, $3.14. Oh, wow. That's actually pretty low. I don't know where the heck that is. Maybe that's in Idaho or something. This driver said, how do you earn tips? I load groceries even onto their porch. Drivers are going all the way to load groceries onto their porch just to get a tip right now. They can pick the music, temperature, and roll the windows down. We can't talk or not talk. Requested stops do not bother me. Take your time. No, this is not good advice. You should not be waiting for your passengers to go grocery shop. I've had a passenger when I first started driving for Uber, or I think it was actually for Lyft. I had a passenger who I picked her up. She had a bike with her, and I was like, new. So I put all my seats down. We loaded the bike in, and she had all her stuff. And she goes, oh, can we stock up at Target real quick? And I go, I'm like, yeah, no problem. I'm trying to be nice, whatever. She's in there for 30 minutes, dude. And I'm in there, and I'm like literally in the parking lot, like, bro, 30 minutes. And I'm waiting for her, and I couldn't leave because I have all of her junk in my car. I have her bike in my car. And she finally comes out with a ton of groceries. She's taking 10 minutes to load her groceries, walking back, putting her cart all the way back. And I'm like sitting there like, I think I made $1 or $2 for waiting 30 minutes. And, I could have been out driving more. And so the whole thing from taking her, and, after we loaded her bike in, I put all my seats down, we drove over there, drove over to Target, drove her to her place, took all of her stuff out. I think I even helped her take her stuff to her place. She didn't leave me a tip. And I think for that whole thing, I made like $20, and, it was over an hour. Maybe it was even less. Maybe it was like $17, and it was well over an hour. And, anyways, I'm sorry. I'm rambling right now. Let's read some comments, shall we? Let's read some comments. Why not? I don't know really how to like share the chat on my screen, except, I have it right up here. But yeah, $3.29 in Texas. Yeah, of course you're in Texas, bro. That's where you get the best gas prices. I wonder why. You guys got, who's in Texas? Is that Greg Abbott? $0. I'm EV. Feel grateful for that. Yeah, Joshua Lemus. I'd be interested, Josh. Do you see electric vehicle prices, charging prices increasing at all, or is it still like pretty much the same? Adolphus Jeffrey says Lyft Lux pays $100 an hour, but you must set that up. I work super early. Tomorrow I will start at 3 a.m. in San Marcos, California. Okay. San Marcos is a little bit, outside of San Diego, but Adolphus Jeffries, that's what he is saying. Let's see if we can pull up a map of San Diego, shall we? Okay, so let's see. So we have one of our commenters essentially saying that he works in San Diego, and he starts in San Marcos. San Marcos is, I believe it's somewhere up here. Oh yeah, here it is. Sorry, it's literally right there. So he starts up here at 3 a.m. and I'm assuming he's waiting for an airport ride down through here, so he can get an airport ride. The airport is right around here somewhere. Yeah, San Diego Airport. But he's doing Lyft Lux, so I don't know. Very interesting tactic, but I mean, he says it's working. He says it's making $100 an hour. So yeah, be interested to hear more about that strategy. Drivers are getting paid to depreciate their car to the ground, John says. See, that's another thing that I have always talked about is car depreciation. The more you drive, the more miles you're putting on your car, the less value your car is, and you're making money, but at the same time, you're losing value on this asset, which is your car. So essentially, you're trading your car value for money. It's in a weird way, like a weird loan. And Uber and Lyft do not want you to think that way. They want you to think, oh yeah, your car's going down in value anyway. Your car goes down in value every year. But yeah, do normal people drive 80,000 miles a year on their car? No. The average is like what, 10 to 15K? Let's pull this up. Shall we? Okay. Average car usage miles. Working age adults drive the most out of all age groups, 20 to 44, driving 15,000 miles on average. 16 to 19 and over 65, 7,000 a year. So yeah, I mean, there's a lot of Uber drivers who are over 65, and normal people who drive, who probably retired or whatnot, don't drive too much, or maybe they have a part-time job, whatever. Uber drivers drive. I mean, I hope somebody has done a statistic. 30 to 45,000 miles minimum. That's probably 1,000 miles a week. Gosh, I mean, if you're a full-time driver, you're putting on, guys, comment down below, any full-time drivers out there, how much you drive on your car. Because I know when I was driving full-time for Lyft, it's not weird to put on 200 miles on your car in a single day. And, that's around 8 hours of driving. If you're doing that 7 days a week, yeah, I mean, that's like 1,400 miles in your car, 1,500 miles in your car. I know people probably putting in way more than that. Driving 10 hours a day every single day, put on 2,000 miles a week, 100,000 miles. Yeah, this is probably like, I mean, what, if you're driving, gosh, it's hard for me to do the math on that, but so let's say you're driving 30 to 40 miles per hour on average, right? You know, with stop and go traffic and etc. Maybe a little bit less, 30. Yeah, 30. Let's do 30. I mean, and then sometimes you're going 80 miles an hour, so it's like averages out if you're speeding. 65, right? Let's be like by the rule here. If you're putting on 30 miles per hour, and you're driving for 8 hours, that's 240 miles. So if you're doing 10 hours a day, which I know a lot of drivers do, 10 hours a day, you're putting on 300 miles a day. So for seven days. Yeah, I would say it's anywhere from 1,000 miles to 2,000 miles per week, right? So I would say the average driver, the average kind of like more so full-time-ish driver, 30, 40 hours a week, probably putting on 1,000 miles a week, 40,000 miles a year, 50,000 miles a year. And the super full-time driver is doing 100,000 miles a year. Your car is literally going, like your car's value is going straight down. And not to mention all the, you know, car maintenance prices. But again, Uber and Lyft don't want you to think that way. They want you to think, oh yeah, you know, your car goes down in value right after you drive it off the lot. Your car, you know, car depreciation isn't real because you can write it off in your taxes. I've heard some of the strangest comments about car depreciation. And if you don't take into consider car depreciation, then let's just say Uber is, you know, you're one of Uber's favorite drivers. Yeah, Tank said 1,000 miles for 5 days. Sounds about right, bro. Sounds about right. All right, guys. Secondly, I want to say, if any of you guys want to watch me on Twitch, I'm on Twitch now. You can watch me do live streams. I bring on my friends. I bring on one of my good friends, Farha Khalidi. You can watch her. I've only done 2 so far, but I haven't really told anybody about this, but if you want to watch me on Twitch, you can go to twitch.tv/DylanHemrick, watch my content. I haven't even gotten into the Reddit, the Uber driver subreddit. There's so much I can talk about on this live. I really like live streams. Let me know if you guys like the live streams. But again, yeah, check out Buckle down below. They won the clearly rated 2022 Best of Insurance Award, and they're an car insurance company for Uber drivers, Lyft drivers, Instacart, all these Grubhub, etc. Essentially for rideshare and food delivery drivers. And right now, when you sign up for a free quote, they're going to give you $20. And this video is brought to you by Buckle. So thank you so much, Buckle. And yeah, I'm really excited to connect with you all here. Thank you all for watching the video. Again, please thumbs it up and make sure you subscribe to the channel and turn on post notifications so you get notified when I do go live next time. Thanks for watching, guys, and